Rahul Bhasin, managing partner with Baring Private Equity Partner, joins us now. Let's connect with him. Good morning. Great to have you back. The bulls
Hey,
are
good
back.
morning.
The smiles are back. The color of tie is green. What you got on your tie? Are those
Elephants.
bulls, elephants,
Little
tigers?
elephants.
Little elephants. That's how India is moving, isn't it? The elephant way.
Always been, right?
So
Its own path.
how are you investing in this rather volatile and random world? 6 weeks ago, everybody was talking about inflation. Now everybody is worried about recession.
I think both are very valid worries. I mean, the kind of monetization that one has seen for the last, I think, 14 odd years in the world. I think one should worry about inflation because you just increase the money stock to that extent. For almost 12 years, what was also happening was that the central banks were increasing the reserve requirements of the banks. So the broad money was not increasing at quite the same pace. But during the COVID monetization, none of that happened. So there is, intrinsic inflationary pressures around the world. Um, which suggests to me that if that were to happen, then you still have a lot of opportunity in all real assets and plays related to real assets, right? Yes, now everyone's talking about recession, and therefore you're suddenly talking about commodity prices sell off, and suddenly the bull run, the supposedly multi-year bull run in commodities seems to have ended in 18 months. I really don't think so. I think that demand is, the expectation is that economies will slow, demand will come off. But I think if one looks a little deeper at that entire commodity cycle, one will notice that um, because of ESG related concerns and sort of, the dominant talk, you find that in spite of the fact that there has been shortages in some of these commodities building up, there is no capex which has taken place in almost 12, 14 years. Now, what happens in any typical commodity is that if you don't do capex, then your yield from your current mines or your current oil wells, etc., keep declining. Now, so the minute the sort of economy starts to normalize again you'll have a shortage and you'll probably end up with another bull run in that entire ecosystem again. So it's not surprising in that context. If you look at it, the best performing stock amongst the larger companies in India year to date has been Coal India.
Yes.
Yeah, it has been. And Rahul, I'm wondering whether the list of PSUs in your portfolios even recommended, does it stop there or are there more such names?
We don't invest in PSUs. The returns that our investor base look for is significantly in excess of what the markets deliver. So we don't typically invest in PSUs.
Uh,
And
one of
generically, government, I mean, I personally believe that if you were an investor in public markets, I mean, PSUs which have been so hated are actually quite undervalued. But if you're asking me whether we as a firm do that, no, we don't.
Rahul, over the years I've interacted with you, you've always liked IT and you've made investments there. The world is divided as to where IT per se is moving. There are folks who believe that look, there is an attrition challenge, there is a demand challenge, and there is a margin pressure. But then, looking at the COVID experience, some are also saying that the relevance is going higher. What is your view? I mean, can we write off IT, or can we say that best of the gain and re-rating is behind IT?
I think there are two ways to look at it. Let's look at it from a short term investor or a mutual fund manager who has to manage his NAV for the next 12 months or so, right? In 2018 odd, you had P multiples of the entire IT sector was written off. And then you had a re rating, and then you had COVID, so you had a much more serious re rating. So price earning multiples went up by almost 3 to 4 times in that period of time, right? Now, suddenly you're talking about possible US recession, and typically, whenever the US economy has slowed down, IT is generically a high beta demand item because there are a lot of investments which are discretionary. So, with a small lag, IT demand tends to slow down. Even though there is no evidence that of any slowdown at the moment, I think suddenly now people are repricing the IT stocks and multiples have been coming off. But if you look at it, you step back and look at it from any kind of structural perspective, which industry is redefining every other industry? It's actually IT. I might sort of break it down into further subsets and say that the application of artificial intelligence or robotic process automation or cybersecurity kind of um, businesses, these are becoming more and more critical, and you can't do without them to run any kind of business. And I think that structural demand for these things are going to be in a 20-year bull run, according to me.
Okay. Uh, Another important pocket where we've discussed in the past is EVs. And I distinctly remember we've had chats and we've had engagement, very engaging conversations. How's that end of the market looking now? Because when a new trend is discovered, everybody gets excited. Then you have a euphoria, then bubble, then realization, and then survival. How are you looking at that space?
So, as you correctly described it, I mean, you always go through a sort of phase of euphoria. And I think that um, to give you a parallel, you've got to look at, 1919 US market for automobiles, 20,000 companies, 1954, three companies, right? It's not that automobile sales slowed down at any point in time. I think you might see something similar in the EV space. And what's very clear is that a lot of the people in the IC engine space will get hurt, right? Is this adoption going to happen overnight or not? I don't think so. I think it'll take maybe 5, 10 years, except in the two-wheeler space. But it's very clear the direction in which this whole industry is going. Now, the actual manufacturers of, whether it's two-wheelers or four-wheelers, it's very unclear who will win or who won't. But if you actually get in the supply chains of these businesses, those are much more consolidated and those afford much more opportunity for, I think, predictable investment returns. And it's very clear that we have investments in somebody who recycles lithium-ion batteries, and they grow double digits month on month. And really, it's all about whether you can execute fast enough. There's no shortage of demand at all.
Rahul, investor or not, I bet you're monitoring all the developments with Zomato at least. A change in commentary. It seems like there's renewed vigor. I don't think they had much of a choice. Just wondering whether you're finding value now after the massive correction which has come in and course correction as well from the managements.
Well, when the IPO happened, I think you all asked me whether we would invest, and I said that when we did our NAVs, we found that our own calculations were way below the IPO price. All I can tell you is that in this current downturn, the valuation that we had come up with, Zomato almost hit that valuation. Uh, but again, that was what I would consider fair value. Like I said, we typically look at generating alpha at more than 1,500 basis points a year. So we can't invest in the public markets for what's fairly priced and expect to generate that. So again, not for us from um, from our own fund management perspective. But I think that, look, Zomato is a real business. It generates real value. The entire proposition for the hyper local, value proposition for hyper local solutions is a good one. I think that if the board and the management, focuses on making sure that they generate profit pools and protect them, it could be a valuable franchise. I think that that cultural shift is. I get the sense it started to move in that direction, but frankly, as an investor, I would like to see that getting consolidated, because often I find that with a lot of businesses, profit, especially younger and new age businesses, profit is also an attitude and a culture, and I think that that needs to get ingrained. Mm.
we started to see a lot of these companies led by Zomato, of course, now come out with timelines as far as profitability goes. The first time ever that Zomato is given its second quarter of next financial year. But Rahul Bhasin, we're of course at a time now where the boys are going to be separated from the men. Even if you see in the private markets, deal activity is down. Is that something that you're looking out for? There are a whole host of new age tech companies that were supposed to hit the large street. The private investors will want an exit as well.
Yeah, I think one of the areas that I worry about in terms of valuations probably maybe the fintech space, because if you look at that entire ecosystem, uh, are they acquiring the customers? They are, but have they figured out ways to generate profit pools? They really haven't. And I think that that is one sort of space that I worry about, maybe a lot of overvaluation. The other thing that typically happens is that this entire distribution, delivery, these kinds of solutions. I think this has been too much in the hype space for a long time. But the wonderful thing about investing is that, and the wonderful thing in our business today is that, you've had virtually zero cost of capital since 2008 to now for a lot of this ecosystem, and that has generated so much of disruption in such a wide array of spaces that there is frankly no end to opportunity. And if you just sidestep the two or three pockets which make the news headlines every day, there is plenty of opportunity going around. I mean, we've been investing in recently, one of the latest investments we made was in a company which is using space tech, right? So they've had to create intellectual property in edge computing to be able to transfer data from satellites to the ground, then using AI models to capture other data and consolidate it, and then using an analytical framework to make create financial insights out of that and sell that. And they're being able to substitute something which the banks and the financial institutions did at 85% lower price with an 85% gross margin. So it's businesses like that which really excite us. And the company's name is Satshaw, but there is absolutely no end to opportunity. I mean, if you look at all of the developments in quantum computing now, for example, again, it will just revolutionize the way everything works. And but I think that at the very base level, the drivers of artificial intelligence and the way that those will change and transform businesses, and sort of working with businesses who have the ability, the foresight to adopt those technologies, and then in manufacturing, etc. I think there's a very massive disruptive opportunity, which of course suggests that a lot of the old leaders might have challenges to their profit pools and their ecosystems, but it just affords a very nice opportunity set for somebody who's paying attention.
Rahul Bhasin, really appreciate your time. Thank you for joining us, and certainly hope to see much more of you going forward. Keep on wearing the green ties, keep on wearing green ties with elephant, because that's what the India is.
Thank you. Pleasure.